Welcome to my accounting channel. Today we are going to be doing something a little bit different. I thought of taking it to the next level. We are going to be looking at a past examination paper which was written in September 2020 in the Northwest Province. We are going to be dealing with the Northwest Province paper which was written September 2020. It's accounting paper 1 for grade 12s. I've picked out question number 2. It's question number 2, which talks about income statement and notes to the balance sheet. So at the present moment, we are simply going to be dealing with question 2.1. It wants us to complete the statement of comprehensive income statement for the year ending 29 February 2020. Okay, so as you all know, in order for us to be able to do an income statement, we'll be given a pre-adjustment trial balance and also additional information and adjustments to assist us to do a proper income statement. So as we look at the pre-adjustment trial balance, we are also going to be using the information that is given on the adjustments. Okay, and basically what I'll be dealing with is like I'll be explaining to you, giving you a thorough understanding on how to actually do the adjustments. Because as far as I'm concerned right now, all of you as grade 12 learners, you already know how to do an income statement. You know the format and everything, but the challenge is simply on dealing with some of the adjustments. So we are going to start our income statement by looking at the information that we are supposed to use from the pre-adjustment trial balance, and also we consider the adjustments that are given from A to F, and then the other ones that pertain the other parts, we'll look at them again in our second section. As we do the income statement, the first thing that we start with are our sales. So looking at the question paper that we are given under the nominal account section of the pre-adjustment trial balance, we've got the amount for sales, which is 2,435,000. 2,435,000. Okay, and then if we now go on to the other information that is given there, we can see that we also have got debtors allowances, and debtors allowances, they do affect our sales. They reduce our sales. We are supposed to subtract the debtors allowances from our sales. So we minus the 3,725 for debtors allowances. This is debtors allowances. And then before we move on, we have to check again on the adjustments if there is anything else which is going to affect our sales. So as per our question, we can look now at adjustment number A. They are saying that the following adjustments relate to their debtors. A credit note was dated 29 February 2020 was issued for defective stock with a selling price of 2,256. With a selling price, automatically, because they are already talking about sales, the selling price, that stock is going to affect our sales because it is the part of the stock that was actually sold initially. So the 2,256 is going to decrease our sales again because they say that a credit note was issued, these goods were returned. So we are also going to decrease our sales by 2,256. And then after that, I'm sure we'll get the amount that we really do want for ourselves. So when we subtract 2,435,000 minus 3,725 minus 2,256, we'll get the answer. Okay, on my calculator, I'm seeing that, okay, fine, the final amount that we need for our sales is 2,429,019. 2,429,019. So this is now our new amount for our sales after adjusting for these two debtors allowances. These debtors allowances are already given in the pre-adjustment trial balance, but these ones, they are coming from a credit note that is given on adjustment number A. So far, our sales are correct. But we must note that because some stock has been returned, it is also going to affect our cost of sales. So we also have to adjust for our cost of sales before we can actually go on to calculating the gross profit. So let's move on to the cost of sales and see the amount that is given for cost of sales. Cost of sales, they are given at 1,521,875. And that adjustment on A is also going to affect our cost of sales because some of the stock has been returned. So what is the effect of the stock that was initially sold that has now been returned again? It means also at the same time our cost of sales are going to be decreased by the cost price of this stock which was returned on adjustment number A. So we need to find out what is the cost price of this selling price here of the stock that was returned. So if you continue to read the question, they are saying that the company consistently applies a markup of 60% on cost. So we are going to use the markup to find out the cost price. So here is my calculation. I am going to say 2,256 multiplied by the markup is 60%. So in other words, we are saying that this 2,256, it is including 60% markup. So in order for us to find the cost price, we are supposed to remove the 60% so that we can remain with the 100% amount. Cost price is always 100%. So we are going to say 100 over 160, which is the selling price. This is the cost price percentage over the selling price percentage times the selling price. So this is our formula: selling price times cost price percentage over the selling price percentage. Okay, when we say 100 over 160 times 2,256, we are going to get 1,410. 1,410. So in other words, we are going to adjust our cost of sales by 1,410. Remember, this stock is no longer a part of the cost of sales. Why? Because it was returned. So our new figure right now for the cost of sales, we are going to say 1,521,875 minus 1,410, which is going to give us 1,520,465. 465. So this is the new amount for our cost of sales after taking into account that adjustment of the stock that was returned because it was defective. For now, on sales and cost of sales, we are okay. Now it's easy now for even us to calculate the correct gross profit. We are going to take this net sales or this turnover or the sales, we subtract the cost of sales that we have calculated. So this is the new amount for our sales. This is the new amount for our cost of sales. So we say sales minus the cost of sales, we are going to get our gross profit. So we are done now with the first part of the income statement. Remember, when we are doing the income statement, it is sales minus cost of sales. It's equal to gross profit. But most of the work was on this adjustment. For already, you already know the format is sales minus cost of sales is gross profit. But most of the work was here for us to do this calculation to adjust for the debtors allowances, the other debtors allowances that are there, also, and to also show their effect on the cost of sales. Okay, for now, on the gross profit, we are okay.